Welcome back to the cryptowrld channel, everyone. My name is Josh, and we have just seen the official release of last month's CPI data. This is important for all investors out there, and on top of that, we have a brand new fractal forming right now in the Bitcoin price. But more on that later in the video. For now, let's take a look at the brand new CPI data that just got released. And for anyone that might not know what this is, basically the consumer price index gets updated once a month with the release of new data, and the CPI is technically what determines the official inflation rate of the US dollar. And so now that the January CPI data just got released, of course, that updated the official inflation rate of the US dollar, which was a fairly substantial increase from 7% a month ago, and now the official inflation rate is 7.5%. We already knew that there was a good chance that the inflation rate would increase this month, because if you're looking at the Trading Economics forecast, they predicted 7.1%, and if you're looking at consensus, they predicted 7.3% inflation, and both of those forecasts were higher than the previous official inflation rate of 7%, but obviously the current inflation rate of 7.5% exceeded our expectations. And if you're looking at the US dollar inflation rate over the past 100 years, we are currently at the highest inflation that we have seen in about 4 decades. And having inflation this high is not good, especially for the general public. And for us as investors, higher inflation means higher prices. So normally that means higher asset valuation, such as real estate, the stock market, and crypto, for example. But what is important to mention is once we achieve a high enough inflation, like what we're seeing right now, we're seeing a 7.5% inflation, which is very high. Instead of that being a really bullish sign for the market, that turns into a little bit more of a bearish sign. And the main reason behind that is because on really high inflation, we are more likely to see the Fed begin tightening their monetary policies. And so what does that actually mean? Well, it means the Fed reducing stimulus or getting rid of stimulus altogether. And more importantly, it means the Fed raising interest rates. And the reason why raising interest rates is very important is because of the massive amount of debt still in the market right now. In fact, US national debt is at an all-time high, well above 30 trillion US dollars and counting. In fact, debt pretty much everywhere is at an all-time high. So when the Fed starts increasing their interest rates, that will simply make all of this debt more expensive to service. And if the Fed is too hawkish, meaning that if they increase interest rates by too much, then honestly, that could put us at risk of a possible financial crisis. And having this really high inflation incentivizes the Fed to increase interest rates, because one of their main jobs is to keep inflation down towards 2%. And obviously, we're currently a long way off the Fed's targets for inflation. So it's pretty much because of all of that why investors in the shorter term are panicking. And I've been mentioning over the past couple of weeks that even though I'm leaning slightly more bullish here, we cannot start calling this a new uptrend on the daily chart until we at least see one higher high and one higher low. So now that Bitcoin has technically made a new higher high on the daily chart, we need to see a higher low before we can even start calling this an uptrend. And for that, we need the Bitcoin price to come back down a little bit, whether it's here or later on, and basically form another low in the chart above 33,000 US dollars. But here on the weekly time frame for Bitcoin, I've got the 20-week simple moving average. Previously, this moving average has provided a lot of support for the Bitcoin price from time to time, and every now and then it also provides some resistance for the Bitcoin price. But what's very interesting is that we're seeing a lot of similarities between the price action over the past 1 year and the price action that we saw back in 2019 and early 2020. I've just placed some drawings on the charts to help identify some of these similarities. For example, both of these fractals started off with a significant move to the upside, and then we started topping out both times here, and then we fell below the 20-week simple moving average both times here, and then we started bottoming out in a downward sloping bottom that actually took a few months, and then the Bitcoin price finally broke back above the 20-week simple moving average for one last time before we saw another significant drawback. And then after that, we saw quite a few weeks worth of bullish price action here on the weekly time frame, which is what we have been seeing so far over the past 2.5 weeks approximately. And on top of that, both of these fractals have occurred pretty much during a sideways market. So in this time period back in 2019 and early 2020, it wasn't exactly a bull market or a bear market. It was just a lot of choppy price action, and that is pretty much what we've been seeing over the past 1 year. Now, it is important to mention that nothing is 100% guaranteed, but if we're looking at the outcome from the previous fractal, if we see anything like that again, we could be due for at least a continued uptrend here on the weekly time frame. And here on the 4-day time frame, the parabolic stop and reverse indicator also backs this up, because as I've mentioned over the past couple days, the parabolic stop and reverse indicator has provided a bullish signal. And here on the 4-day time frame, historically speaking, this has been very accurate at determining a new uptrend forming in the price of Bitcoin. But like I said earlier, before we can technically call this a new uptrend on the daily chart, we need to form a higher low of some sort. And if you're looking at the Bitcoin Fear and Greed Index plotted on the Bitcoin chart on the daily time frame, historically speaking, after seeing a couple months worth of extreme fear in the Bitcoin Fear and Greed Index, which is these darker red colors, once the Bitcoin Fear and Greed Index finally drifts back into the neutral range, which is the yellow colors right here, historically speaking, that means that Bitcoin is finally flipping into a new uptrend if you're looking at the corresponding price action during those time periods right here. So this is just another indicator that we have that backs up the technical analysis that I just talked about. And if you found this video useful, make sure to leave a like down below. And if you're new to the channel, you might as well subscribe with notifications turned on for more updates just like this every single day. And before you click off, you might as well check out one of these uploads if you haven't already, because these videos can potentially help you make a lot more money in the crypto markets. But that is it for this update. I really hope you enjoyed, and I'll see you all in the next video.